Hello, welcome to the European Open briefing for Wednesday, January the 18th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So the main headlines this morning is, of course, yesterday's speech by British Prime Minister Theresa May, where she outlined some details on Britain's Brexit strategy. The other major movement today is we have a bit of a rebound in the US dollar following yesterday's slide to 7-week lows, particularly against the Japanese yen. And we're seeing slightly firmer oil prices this morning on reports of falling production in China. So let's start with the pound, because of course that's dominated much of the market discussion for the past couple of days, or in fact since the weekend, where we had those initial leaks about what Theresa May will say in a speech, and those leaks were proved pretty much correct, as she confirmed that the UK will leave the single market and will not remain a full member of the customs union. And she said that the UK is keen to strike new trade deals with the rest of the world, and given the fact that the UK wants to be in the position to be able to sign trade agreements, if it remained in the customs union, it wouldn't be able to do that. Plus, of course, she already said she wants to prioritize gaining full control over immigration. So given all of that, it wouldn't be possible for the UK to remain part of the single market. The main surprise from yesterday's speech was the fact that she said both houses of parliament will get to vote on any final deal with the EU, and that was one of the factors that helped sterling make big gains yesterday. It was up 3% against the US dollar. Markets are hoping that if Parliament gets to have a say on any deal with the EU, it's less likely that Britain will opt for a fully hard Brexit, if you like. So there's still some hope that the Parliament will be able to have some say, and which is MPs in the British Parliament are mostly in favour of the UK remaining within the single market. So they're likely to push for as much access to the single market as possible. So that's one of the reasons why the sterling jumped so much against the US dollar yesterday. It's down a little bit today. Yesterday it went above the $1.24 level. It's currently trading around 1.2330. And of course, over the coming weeks, we will see more details on the UK's stance on Brexit, given that in March they're likely to trigger Article 50. If we move on to the US dollar, we can see that yesterday we had quite a big drop against the yen. It fell below the 113 level to 7-week low. It's currently up just above the 113 level. That downside pressure yesterday mainly came from comments by Donald Trump. He told the Wall Street Journal that the US dollar was too strong, and that raised fears that the strong dollar policy of the US administration may be over, and that Donald Trump would be pushing for a weaker currency. The main reason for today's rebound appears to be bargain hunting, given that that was in fact a 7-week low. We had quite a few Fed speakers yesterday. We had San Francisco Fed President John Williams. He supported the case for 3 rate hikes in 2017, and he suggested that this would be even before any fiscal stimulus. He also said the US economy has reached full employment, so he was fairly optimistic about the US economy. Fed Governor Lael Brainerd, she also spoke. She said that she was basically, we already had other Fed officials saying that any fiscal stimulus would result in rates moving up more quickly than otherwise, and Brainerd supported that view. New York Fed President, he was a little bit more dovish. He said that a strong US dollar would weigh on prices, and he also said that the inflation currently doesn't pose a threat to the US, and saying that the current recovery could go on for a while longer, given that there are no inflationary threats, meaning that US rates are unlikely to go up that much. But the main focus will be on Fed Chair Janet Yellen. She's due to speak later in the day. Her speech will mostly be on monetary policy, and she's due to appear in San Francisco. Let's have a look at commodity currencies and oil. We can see oil has been fairly flat over the past couple of days. It's up a little bit today after China said that its oil production will fall over the next few years, and we're already seeing some cuts from OPEC and non-OPEC countries on that oil agreement from December last year. So we're seeing those cuts come into effect. So we're seeing traders becoming more optimistic that the oil market will balance in the first half of 2017, and that's helping the Canadian dollar. It's currently at a 3-month high versus the greenback. The Bank of Canada meets today for its policy meeting. They're expected to keep rates unchanged at 0.5%. There are some expectations, though, that the bank might take a more dovish stance, given that Canada's economy contracted in October unexpectedly. So we've got mixed signals out of the Canadian economy, so we might see a dovish tone out of the Bank of Canada later in the day. If you look at the Aussie and the Kiwi, they pretty much followed the pound. In fact, yesterday against the US dollars, they both surged over 1%. That was mainly due to the weaker dollar, but also the Kiwi had some other additional support from higher dairy prices from the latest bi-weekly global dairy auction, and this morning we had some business confidence data which was mostly positive. Let's have a quick look at gold before we go. We can see gold was up yesterday, mainly on that uncertainty over May's Brexit speech, and also the ongoing uncertainty over Trump's presidency, given his inauguration day is in a couple of days. So yesterday it reached an 8-week high, $1,218.71 an ounce. It's down a little bit this morning. We do have a bit of a positive risk sentiment after the relief following May's speech, where although she did signal a hard Brexit, she did say she at least made her plans clearer, and also said that she will try to get as much access to the single market as possible. If we look at today's calendar, we had some German final CPI figures out already. Coming up later, we've got UK unemployment numbers coming up and average weekly earnings. We're going to have the final Eurozone inflation estimates also later today, and also the US inflation numbers for December, so those will be closely watched. Out of the US, we're also going to see industrial output numbers, and then of course later we have the Bank of Canada rate decision. And not to forget, of course, Fed Chair Janet Yellen will speak later. Plus, we have the Minneapolis Fed President Neil Kashkari also making a speech. That's it from me. Thank you very much for watching, and have a great day.